Assalamualaikum. Hello everyone. I am Nur Adilah binti Ismail. I would like to talk about Islamic banking versus conventional banking. A young entrepreneur wants to expand a business and need financing. One bank offers financing with interest, while an Islamic bank offers financing based on a profit-sharing arrangement. Although both options provide the necessary funds, the principle behind them were completely different. This simple situation shows how Islamic banking and conventional banking may serve the same purpose but operate according to different foundation and value. Nowadays, banking services have become an essential part of our daily life. Many of us use saving account, debit card, online banking and QR payment regularly. However, not everyone understands the principle behind this service and how banking systems differ from one another. As a Muamalat student, I have learned about the principle and operation of both Islamic banking and conventional banking. This knowledge has helped me to understand their similarity and difference. Today, I would like to describe the principle of Islamic banking and conventional banking, their operational difference, and the advantage of Islamic banking. Now, let's take a look at the principle of both banking. Islamic banking operates according to Sharia principle. It prohibits riba, which refers to interest, as well as excessive uncertainty, known as gharar. In addition, Islamic banking avoids involvement in non-halal activities such as gambling, alcohol-related business, and other prohibited industries. The objective of Islamic banking is not only to generate profit, but also to promote fairness, transparency, and social responsibility in financial transactions. On the other hand, conventional banking operates through an interest-based system. Banks generate profit by charging interest on loan and financing facilities. Interest is an essential component of conventional banking operation, and the main objective is to maximize financial return while providing financial service to customers. Therefore, although both systems offer similar service, they are guided by different principles and values. Now that you know the principle of both systems, let's look at how they operate. Islamic banking and conventional banking differ significantly in the way they generate profit and manage financial transactions. Islamic banking use Sharia-compliant contracts such as murabahah, musyarakah, and mudarabah. Through this contract, profit is earned through trade, investment, and partnership activity rather than through interest. For example, under a murabahah contract, a customer requests the bank to purchase an asset on their behalf. The bank purchases the asset and sells it to the customer at an agreed profit margin. The customer pays the amount through installments over a specific period. This arrangement ensures that the transaction is based on a real asset and legitimate trading activity. In contrast, conventional banking mainly earns profit through interest. Banks provide loans to customers, and customers are required to repay the principal amount together with interest charge. Profit is therefore generated directly from lending activity. As a result, Islamic banking embraces risk sharing and asset-backed transactions, while conventional banking focuses on interest-based returns. Besides, their operational difference, Islamic banking also offers several advantages. One of the main advantages of Islamic banking is its emphasis on ethical and transparent financial transactions. This means all financial activity must comply with Sharia principles, ensuring that investments are direct toward halal and social responsible factors. This helps customers feel more confident that their money is being managed responsibly. Another advantage is fairness and social responsibility. Islamic banking encourages risk sharing between the bank and its customers. Both parties share responsibility and benefit according to the agreed contract. This creates a more balanced financial relationship and reduces the possibility of exploitation. Furthermore, Islamic banking contributes to a sustainable financing system. Since investment must be linked to productive economic activity and real assets, Islamic banking supports economic growth while discouraging harmful or unethical business practice. As a result, Islamic banking has become increasingly popular, not only Muslim but also among non-Muslims who appreciate ethical and responsible finance. Today, we have explored the principle, operational difference and advantage of Islamic banking compared to conventional banking. We learned that Islamic banking is guided by Sharia principles, differ from conventional banking in the way it generates profit and promote ethical financial practice. Truth is truth. Its unique approach to financial transactions. Understanding this difference helps individuals make more confident, more informed financial decisions. The next time you open a bank account, apply for financing or use banking service, remember that understand the principle behind your financial choice is just as important as the service themselves. Thank you for listening.